management is a part of risk management, but the risk management is basically is a very vague, big area. We will touch a little bit on the risk management, but we will focus on the financial risk management. So financial risk management is something got to do with finance. It's much more easier to understand. So anything that related to or because of the cost of finance, financial product, financial market, and then financial economy will be fall under this category, financial risk management. So before we start, okay, we need to understand what is risk. Okay, apa itu risiko? Um, I is there any is it this class that we have international student beside Indonesian? Because I might use some bahasa a little bit, but uh, if there's a international student not from Indonesia or Brunei or Singapore, then please remind me if I say when I speak bahasa. Is there anyone at the moment? Lian Tat Zian, are you
Yes, Doctor.
where are you from?
Malaysia.
Oh, okay, okay. So ada lagi tak siapa? Is there anyone? Uh, Mr. Octopus? Who's this Mr. Octopus? Lee Yuman? Lee Yuman, are you a Malaysian? The name is quite familiar. Tan Tan Wen Yen? No?
I'm Malaysian.
Okay. Alright, good. Okay, anyway. So what is risk? Okay, apa itu
Malaysian.
risiko? Who's speaking? Lee Yuman. Mr. Octopus. The name is quite familiar. So anyway, back to our class. So it's just only like 1 hour. So is we kind of like
Huh?
have a chat first. So what is risk? Risk means a hazard or exposure to loss or injury. Okay? The chance that some unfavorable event will occur. In finance, basically we consider it as normally it will be monetary loss. Monetary loss in the sense that maybe you have to pay more, or you will get less, or you expect that your shares are going to increase. The price of your shares is going to increase, but something happened, so the price drop. Okay, you're making a loss. You're using someone else's money to do a business, and then the business is not doing well, so you incur debt. And so these are the things that considered as a risk. Okay. Beside that, like I said, risk is much more bigger. If you look at from a bigger scope, risk can be anything. Where you might fall down, or you might met an accident, or you just simply losing your girlfriend, your boyfriend is also a risk. Okay, or you cannot get through with your study. That also considered as a risk. Okay, so these are the things that basically risk is something that you expect to happen. Okay, you expect something, you will get something, but at the end of the day, that was not the case. You know, so in a way, okay, what normal businesses will do, any corporate any organization for that matter, what they are trying to do is that they're trying to manage their risk. Okay, manage it. So how are they going to manage the risk? So basically, this is the one that uh, we're going to discuss in this course, and also we are going to identify and learn a little bit on each and every type of risk that associate with in financial world. Okay, associate with financial transaction, financial markets, and everything. So finance perspective, we basically are talking about the investors. Okay, we are talking about investors. We're talking about business. Okay, but basically the unit of analysis will be the investors or the person itself. So we in finance basically we will consider investors. Okay, we can categorize them into three category. One is the risk averse. Okay, risk averse. We have risk takers, and another one will be risk indifferent. Okay, what do you mean by risk averse? What you mean by risk takers? What you mean by risk indifferent? So risk averse is a person who try to avoid the risk. Okay, try to avoid the risk. So you have to identify the risk first, and then you will try to work out something in order for you to avoid, or if you cannot avoid, you try to minimize the risk exposure. Minimize the risk exposure. How? Basically, we're going to, there will be a few ways. Okay, you might not into getting into that ventures, for example, or maybe you have some certain legal document or legal contract saying that only a certain portion of your contribution, your capital. Okay, so you form a new company, or you have the type of companies, like for example the limited liability partnership, LLP. Okay, so basically the partners, they will limit their loss if anything happen to the company, or they might want to shift the risk, shift to someone else, which is not very good, but then that's how it's been worked on in financial world. Okay, so risk averse is a type of person who are basically try to avoid. Okay, like I said, how they want to avoid, they have to identify the risk, and then they try to work out something so that the exposure will be very minimum, or if possible they just don't want to get involved with whatsoever. So risk averse people is normally we consider in finance. Okay, by the book, we consider everybody is a risk averse type of person. Okay, meaning to say we will try our level best to avoid all the risks, if not minimize. Risk takers is by the name itself, we know. Okay, those are people who really wants to take a risk. Okay, with the mind that if you take high risk businesses, for example, or ventures, for example, the the return will be also higher. So wait, I can't see my okay. All right. So risk takers basically a person who wanted to have a big return. Okay. So in then it will be sorry. You want to take a risk, high risk, because of it will be compensated by high return. Okay. So that's how normally people will venture into high risk investment, high risk active business activities. Okay, because of they want to get higher return. Okay, for example, if you play, if you just happen doing some trading in stock market, for example, these are some people consider it as a risk takers. Some people think that it's not that risk. Okay, it's not that risky, but we can see that the market itself is very volatile. So there's no specific prediction method to predict what your price is going to be. You have to be very what call it alert with the surrounding. Okay, especially when it comes to the economic condition of a certain country, because you get to understand that in finance, okay, one thing is one thing which makes finance different from other of the subject is that I mean financial world. Okay, finance is that whatever happens in somewhere in Alaska, or maybe somewhere else in any part of the world, it may affect you here in Malaysia. Okay, unlike other businesses, like for example, like for example, one company, one factory, or one producer of um, a toothpaste, for example. Okay, they shut down their business or they don't want to produce any more toothpaste. It won't affect everybody in the world. Okay, and maybe only in that area or maybe in that particular country or state might affect it, but still it won't be as much as bad as if anything happens to the bank, to the financial market or financial institution. Okay, we can still buy other type of toothpaste or there's be a lot of other companies that offer the services or sell the product. So basically it's not that bad. Okay, if anything happened to this company, you will not be strongly affected because of that activities or whatever happens. But unlike in finance, in financial world, okay, if something happen, it will affect everybody. This is what we call as systemic effect. Okay? In financial world, we have what they call as systemic effect. Apa maksud systemic effect? What do you mean by systemic effect? Systemic effect is sometimes they call it as dominoes effect, meaning that if something happen, it will lead to another things to happen, and then it will lead to another thing, another thing, another thing. So it won't stop until it's finished everything. I give you a good example. For example, let's say, um, the worst scenario, okay, the closure of financial institution, banks, for example. If bank is closed, what happened to us? What do you think will happen to us? Anybody? Petang ni, we have to be a bit active sikit, right? Because of it's, my eyes are closing slowly. You guys pun sama kot. Okay. What happened? If let's say bank, kalau katalah bank tutup, what happened? Anybody? Rasa-rasanya people will rush to the ATM. Wait. Tolonglah cakap. Ini pakai tulis-tulis ni, I have to read, Chris. People will... Why? The one is there. Ya ke? Is it true? People will rush to but the bank closed down already. They shut off. The system shut off. If the bank the system is shut off, so automatically the ATM also will shut off. Then what happened? Anybody? Anybody?
No
If bank
transaction
closed.
happen.
Come again, sorry?
No transaction happen.
No transaction happen will leads to akan menyebabkan apa?
Dari segi duit, dari segi kat luar negara ke, semua akan terstop. And then kita sendiri takkan ada duit cash.
Exactly. Thank you. Siapa Farah? Thank you, Farah. That is what's going to happen when the transaction, financial transaction stops, and then what happened to the company? Kilang factories, companies, they don't get the money. Okay, they cannot do their business. So what happened? when they cannot do any transaction or whatsoever, there's no business. What happened to the company? They will shut down. When they shut down, what happened to the workers? No more job, correct? Unemployed. Then when they don't have money to buy food, to buy anything, to service their loan, what will happen? They will start doing all these mischievous action things. They start to rob people. You know, it's not because of just for the kick, um, Saturday night kick, but then it's for their survive. Okay, so this is what happened. This is what we mean by financial risk. Okay, it will affect other people as well, and it will affect everybody in that area, in that particular state, or in that particular country, or even other countries. Like for example, the war, the trade war. I mean, between U.S. and China at the moment right now, it'll affect us. China and US is quite far from us. I mean, I also don't know whatever happens in US or whatever happened in China, but then we all been affected because of this. So in financial world, we can say that the risk, financial risk, is very important because it has what we call a systemic effect. So it's a dominus effect. Okay, but and then if let's say the worst scenario that we can happen in Malaysia right now, or any country for that matter, is when there's a closure of bank, when the bank goes bankruptcy. That is the indicator or signal that the economy is in a very bad shape. Okay, there are a few other indicators when it comes to when we want to look at the certain country's economy, for example. There are certain other few indicators that indicate that particular country, okay, is having financial problems. Okay, Malaysia so far, of course, what we heard, okay, word from the street that we have a lot of debt, you know, and in terms of jobs, there's a lot of problems when it comes to job creation. You know, in the investment is not that good, and because of this pandemic, because of the closure of our boundaries, okay, and we try to curb the pandemic. So these are the things that can also be a source of what we call as financial risk, or we can say that as a another um, indicator that we are going to what we call as economic recession. Hmm? Okay, so basically, financial risk is quite hectic, I can say. Okay, it's very difficult for us to maintain, very difficult of us to overcome this kind of problem. What we can do is just we try to be proactive. Okay, we try to identify what will happen. Okay, and then if that happen, what will be the plan A, what will be the plan B, you know, then government try to do all these things, and even any company for that matter, they will have what they call as financial risk management. Okay, they have to have a contingency plan if anything happens to them. Okay, so come back to the type investors. So basically, we have risk averse and we have risk takers. Takers is basically those who are, you know, they like to invest in high risk. When talking about finance, they like to invest in high risk investment because of they believe that high risk will be compensated with high return. So it depends on the type of person that you are. Okay, and then we also have what we call as risk indifferent. Risk indifferent is basically the neutral with the risk. It's not that they can neutral the risk, but then they don't have any feelings about risk. Okay, I think I suspect they, you know, this person must be someone who are really rich. Okay, so they don't have to think about the risk. It's just like, you know, they can just simply invest whatever they want to invest in, or they want to, you know, transfer the money, or they want to set up companies. They don't have any problem with this. Okay, so that is risk indifferent. So in finance, we will use risk averse as our type of investors, okay, in finance. So whatever we're trying to do here is that we just want to avoid or minimize the risk. Okay, so what is financial risk? Financial risk is generally related to the odds of losing money. Okay, so if you're losing money because of you've been cheated, that is a risk. Losing money because of your investment turns sour, that will be a risk. Okay, so anything got to do with financial product, that's what we call as financial risk. Okay, the government, let's say the government um, impose a law or regulation saying that there'll be no more um, uh, Google cannot be used in Malaysia, for example. So that will be also a risk, okay, but it's not a financial risk. Okay, but in a way, it will eventually relates to financial risk because of the millions of people are using this platform to do businesses and everything. But then at the end of the day, the government say no to Google, just like what happened in China. Or they say that government said impose of certain restriction regulation that you cannot use this, you cannot that do that. So basically, it will at the end of the day, it will go to the financial risk. Okay, because I can say that our life, right, goes to the account or finance. At the moment right now, you guys, I believe everybody have their own account, bank account, correct not? You have your own bank account. Imagine, um, um, okay, wait. I just want to ask, okay, is there anyone, okay, when we talk about your life goes into the account, and that account basically you use that account to buy Grab food, you want to buy something from the Shopee, Lazada, you want to do some financial transaction at the same time you are expecting people to pay you something, for example salary, if you work as a part-timers, or if you manage to have very small businesses, you have business transaction. So the accounts is basically, it's all about finance. Okay, you need to have an account. So imagine if this thing, if something happened to the bank, okay, what will happen to you? So that goes to the financial risk, systemic effect of financial risk. Imagine, okay, we can say that now bank is very important. Okay, it's very important, which is the financial world, right? Very important in the sense that we have been using this account for a very long time. Okay? Like myself, okay, I've been using this bank, my bank, from I think since 1999. Okay? So imagine the information that bank have about myself, okay, for this long period. Okay, they have all the information. Okay, that's the reason why it relates to financial risk when people steal your data and sell to someone else. Basically, they can use this data, okay, to do something, and this is what we call as financial crime. Okay, now it's becoming an issue actually when people try to get your data. Okay, so now when it comes to securing your own account, you need to regularly change your password. Why is that? Because of there's a risk there. Okay, there's a lot of bad people out there. Okay, there'll be a lot of hackers. They wanted to hack your data. What's so great about this data is because of they can use this data to manipulate this data, and then they can make money out of it. Okay, and then they can um, they can they can use your data um, to create another person, for example, and then you are the ones you're going to answer. You are going to want the ones to be liable with all this kind of transaction. So this is another types of risk, okay, that is emerging in the academia world when it comes to financial fraud, financial crime, okay, and money laundering, for example, money laundering, financing terrorism, for example. These are all about finance, and this is what we call as um, something got to do with financial risk. Okay. So the financial is most commonly referred to the possibility that a company's cash flow will provide inadequate to meet its obligation. You're doing business, you don't have cash to pay your current obligation, your current liabilities, your suppliers, invoices. So these are what is another type of, not to say another, is example of what we call as financial risk. So it can also apply to the government that default on its bond. So there'll be a lot of things. Okay, government also the same thing. If let's say the government couldn't pay, um, they default on their government bonds, for example, or treasury bill, for example. So that will also consider as financial, even though it's a government, but still, okay. This what happened with in Malaysia, we have this previously, I don't know whether you still remember 1MDB cases which still going on. Okay, these are all types of financial crisis that we think it's very important because of it will affect everybody, not only our something got to do with our treasury, but it can also affect us as an image of Malaysian people when it comes to doing a financial transaction in with foreign countries and so on. Okay, so it can also may exist due to the countless transaction in financial. Now we have this what they call as Bitcoin. Sorry, the blockchain. Okay, have you heard about this blockchain? Anyone? What is blockchain? Okay, we're talking about transaction, right? Um, um, have you heard about this blockchain? Semua orang tidur Sekejap saja.
Yes.
Sekejap saja. Is half an hour already. What is blockchain? Why is it can be considered as risk to certain people? Apa? First thing first, what is blockchain? Anybody? What year you guys are right now?
Sorry, doctor, I don't know what is blockchain.
Tak tahu. You guys tahun berapa sekarang? Tahun tak akhir ke macam mana? Are you a last year student?
Yes, last
Yeah.
year.
Oh, last year ah? Oh, okay. So all this while tak ada orang ke cerita pasal blockchain? Tak ada. Blockchain ni is actually is a electronic ledger. Okay? Because of the technology. Because of the technology that we are having right now. Okay? So they have this technology what they call as blockchain. So blockchain is like it is an electronic ledger. Okay, ledger in the sense that let's say I want to buy something from Christopher, for example. Okay, so selalunya kita akan normally what I'm going to do is that we complete the transaction. I pay him, and then he will give me the receipt. He will give me the invoice, and then I'll pay him. He will give me the receipt. That kind of thing. So as usual, that what we call as ledger. So as a company, you will take all those receipt and everything, you put inside your ledger and then try to balance it out, and all this accounting stuff. But for when it comes to electronically doing this is what they call as blockchain. Okay, blockchain is they develop blockchain because of of they don't want to be supervised. They don't want to be monitored. Okay, they want to be decentralized, not centralized, but decentralized. They want to have their own people. They want to have their own currency transaction, okay, without getting involved by the government or any regulatory entity. For example, the central bank, the security commission. They don't want these people to disrupt their not to say disrupt, but then interfere with their transaction. Okay, so blockchain chain, you see. So the journal itself, okay, the electronic journal itself is called block. Okay, let's say I have a transaction with Christopher. So when I complete that thing, I have one block, one ledger, electronic ledger. Okay. So this electronic ledger will be stored in the data, in the database, okay, in cloud, for example. Okay, just between this in this virtual community, so everybody can see that one. But the beauty about blockchain is that nobody knows. Okay, nobody knows who is this person, who is doing the transaction. Okay, is nobody knows about myself and also Christopher. But what we know is only encrypt. Sorry, that thing is encrypt. Crypt, crypt is in if you go for this in computer study. So encrypt is basically they just only a numeric, only a numbers. There's no alphabet. There's no alphabet. It's just like zero and one. Okay, so they have every transaction they have their own encrypt. So that's what they call as block, okay, or electronic ledger. So when I complete one transaction with Christopher, so when I want to do another transaction with, say, Song, for example, um, the virtual community, okay, when I want to buy something, which means I will pay to Song, which I don't know who is Song is, okay, whether I don't have any idea about her or him because I don't know. It's just only a transaction. So what I will ask from the virtual community is that this virtual community will do the checking on behalf of myself. They will check with Song, is this transaction or this Song is really genuine seller. Okay, so that means if you say, let's say you are defaulted before, Song is she has doing some bad transaction previously. So when I want to do transaction with her or him at that time, okay, it will be blocked. That is, the transaction will not go on because of basically the virtual community will tell me that this guy, this particular seller is not a good seller. They have problems. If it's okay, then when I complete my transaction with Song, I will have another electronic ledger. So imagine if I have a lot of transaction, so all this ledger will be connected. When they connected, that's what they call it as blockchain. It become a chain. So basically, whenever, let's say, Christopher wants to do a transaction with someone else, okay, he will let us know that is this guy's okay or that guy is not okay. So we will look at all this blockchain. We do the checking. Okay, it's not the government, it's not the central bank. It will be the virtual community. That is why they consider it as a decentralized system. Okay, so this transaction will be a lot, and then because basically the virtual community is very big. We don't know who will do the checking, and when they do the checking, this is what they call as mining. Okay, they will get certain payment in terms of cryptocurrency. Okay, encrypt cryptocurrency. So this is where Bitcoin come in, Xeon comes in, and these are all cryptocurrency. And sometimes they also have crypto token. Okay, cryptocurrency basically you can buy, you can sell, you can use cryptocurrency to buy something or sell something. So what their idea is, because of the technology, they want to have their own system. Okay, they don't want to get involved with the conventional type of transaction. So that's the reason why they have their own thing. So what the risk associated with this is that if, let's say, I'm buying a gun, a weapon, okay, or I'm using Bitcoin to finance terrorism, nobody's know, because there will be no names. You don't know. You only know the encrypt or the electronic ledger. Okay, so that's the reason why right now certain country has already banned, okay, ban using this cryptocurrency. And in fact, another thing that might interest we all is that they have their own um, in business, in financial world, in the stock market, we have what called as IPO, initial public offering. It is when the company decided to go for public, meaning to say the company is doing well, so now they want to expand their business, so they need to get some more capital. What they're going to do is that they're going to go for what called as IPO, initial public offering, meaning to say a certain portion of the company shares. No, sorry, the companies will be liquidated, okay, in terms of shares, make it easier for you to guys to understand. So a certain portion, a percentage of the shares, they will put it in the stock market, and then people will start buying, okay, and then stock exchange, right? So when you buy, you become one of the shareholders in that particular company. At the same time, the company will get the money from your purchase, and then they will use that money to expand their business. That IPO. So basically that's the reason why companies go for public, because of to get extra capital, and at the same time, we're talking about, there are also other things like bagi branding. Companies who are already in the stock market means that the company is very good, because not many companies can just simply list it down in any stock exchange. The security commission, the central bank will make sure that this company is really stable. Okay, when it comes to their financial structure, they're very good. They're doing their business is very good for a couple of years. They have all this diligence, and then only they've been allowed to be listed in stock exchange, because of, we're talking about public's people here. Sorry, public's money. Okay, so public will buy the stock. So if anything happen to that company, it will directly affect it. It will affect the public. So we don't want that. The government doesn't want that. So what they will normally do is that they will going through this very strict due diligence. The central bank, the security commission will look into this particular me until they will given the permission to go for public. So IPO is basically raising a capital, but in blockchain, okay, in blockchain they can also do the same thing. In the blockchain businesses, okay, where they have this cryptocurrency from the blockchain, they can produce a cryptocurrency. So cryptocurrency, they can also do the same thing. They call it as initial crypto offering, initial coin offering. Sorry, initial coin offering. Okay. So basically, what they do is that they will set up their own stock exchange, like that, like electronic stock exchange. So they will say that, okay, we're going to produce this. Okay, we're going to have this company. So anybody who wants to contribute, anyone who wants to invest, please. Okay, so they can raise this cryptocurrency in the virtual world. Okay, so what if the one who did that is basically a defaulter or a fraud? Okay, so what happened? Because cryptocurrency, they have values. They also have values, but there's a lot of argument. There's a lot of debate is going on. Okay, because of, like, for example, our money is based from the gold, but when it comes to cryptocurrency, there's nothing. It's just like, it's conjured out of from the thin air. And Bitcoin is one of the good example, and it becomes popular because until today, nobody in this world knows who create Bitcoin. Okay, they claim that there's one guy, Satoshi Nakamoto, if I'm not mistaken, Nakamoto ke Nakatomo, I can't remember. Satoshi. This guy, he or she, we don't know. Basically, come up with one document telling people how does Bitcoin works. Okay, so it's posted in the virtual community, in the internet, and they try to figure out who produced this. Until today, it's quite mystery. So that's the reason why Bitcoin is quite popular. Okay, and people buy for it. Okay, so these are, when it comes to the transaction, there will be a lot of risk associated with it. Financing terrorism, for example, money laundering. So if you have money drug money, for example, you want to transfer this money or you want to pay to someone else, you can use cryptocurrency. You can use Bitcoin, Xeon, Lite, for example, to pay or to transfer the money, and then that guy will, they can liquidate that what call it, the cryptocurrency, and they can get hard cash. So it's really interesting, and when it comes to this kind of new things that happens in the financial world. So now the regulators they have more responsibility. Okay, not only previously they only have to watch the conventional transaction, things like that. Government also the same thing, right? They have to monitor this, they have to impose certain regulation, blah blah blah. But at the same time, now they are emerging new kind of market. Okay, what the blockchain, the cryptocurrency. So they also have to have someone who are really good at it. Okay, to understand what is going on and try to identify. But this is very very difficult, and that's the reason why certain countries they decided to give up. Okay, what they're going to do is they're going to ban all this ICO, this cryptocurrency. If you want to do outside, it's up to you. If anything happen to you, the government will not responsible for it anything. Okay, so this is what we call as this is something to do with the transaction, countless transaction in financial world. Sales, purchase, borrowing, lending, various other activities also associated with financial risk. Okay, so far, any question? Ada apa-apa soalan? Okay, I think we can continue the next slide on our next class. Okay, but okay, in the meantime, do you have any question that you want to ask? Ada apa-apa? Is there anything that you want to ask about finance risk or whatever you heard before? Maybe we can discuss a little bit. Maybe our friends also need to know something. Anything that might interest you in terms of financial world that you want to ask? Ada? Ada tak? No? Okay, so kalau tak ada, if there's no question, so we will stop our class today. And our next class bila? When is our next class?
Tuesday.
Tuesday?
Tuesday what time?
2 to 4.
2 to 4. Tuesday?
Yeah, we change it, right?
Oh, I see. Okay. I have to, you have to remind me, okay? Sometimes I just, I overlook, forgot. So our class supposed to be on Thursday, right? But now we changed to Tuesday, 2 to 4. Right.
Yes.
So just remind me in our group, okay? That we will have on Tuesday, okay? 2 to 4. All right, guys. We'll try my level best to provide all the materials in the e-learning, because tomorrow is going to be a very big day for me. I have a couple of workshops need to attend. I'll try my level best. All right. Okay. So, guys, thank you very much, and I'll see you next class.
Thank you,
Okay,
doctor. Thank you.
Thank you, doctor.
Thank you, doctor.
Thank you, doctor.
Thank you, doctor.
Doctor.